Hello everyone, this is Sarvesh from SS Tech. So this video is all about segments. So this video is interesting because without segment we can't place even a single order. So we need to take a decision in which segment we should place our order. Okay. So as you can see here, there are segments equity, derivative, currency and commodity. Okay, which is derived by the exchange. So I have a doubt in my mind, you have or not, I don't know, but exchange was doing great job that it was exchanging shares of organizations from the one sides and the money from the other sides, right? So it was exchanging both of these between two investors. Then what's the need of these segments? Correct. So let's try to understand first by an example, because always human mentality capture example too quickly. Correct. So let's try to understand. So everyone goes to a mall or any shop according to your needs, what product you need, right? So first of all, you enter into the mall. Correct. So you enter into the mall. So what you will see first? Correct. So you will choose the brand, whatever the product you need. Okay. So for example, you need a hair conditioner shampoo. Just a small example. So what you will choose the brand first, right? So there are multiple brands like Lux, Sunsilk, etc. Okay, so you first choose the brand like Lux and Sunsilk. So you choose in this one, Lux one. Now, what is the product of Lux? There are multiple products like shampoo, soap, oil, etc. So you choose in the product like shampoo. What you further see? You will see a different category of this shampoo. One is a bigger one bottle, one is the middle one is the smaller one. So there are three categories of these bottles, right? So you have a three different choices. Now, when you will buy this bigger one bottle of that shampoo, when your mind is clear that Lux brand is too good, right? And you do not want to replace this product in a short period of a time. So you can keep this bottle for the long time. Correct. So here you are not taking any higher risk. So here it is a lower risk, because your mind is clear, right, that brand and product both are too good. Okay, now when you will pick these two bottles, okay, when your mind is not clear that the brand is good or not, right, so here you are taking the risk that you think in a short period of a time will change it if that brand is not good. Correct. So you just try for the short time. So here the expiry is short time as compared to bigger one, because it will be finished too quickly as compared to bigger one, right? So expiry is a short time, and here you are taking higher risk. Why higher risk? Because you are not knowing that Lux is good or not, right? If it is not good, you will change in a short period of a time. So according to your risk, that brand has categorized into the three different choices. Correct. So always human mentality wants different choices for the single product according to their risk. Now just relate this example with this system. So exchange also giving you a different categories like this. Okay, so this now clear, right? Why exchange derived this according to their risk only. Okay, now let's try to understand. So similarly, you enter into the exchange NSE, BSE, NCX, ICX according to your need, right? According to your investment. So you enter into the exchange. Now you will choose the brand, nothing but like a company. Okay, so you can choose TCS, Wipro, Reliance. There are too many stocks are listed in an exchange, so you can choose any of these according to your investment. So you choose in, for example, a company TCS. Okay, so when you will buy TCS in an equity segment, so these are the categories. Okay, so these equity segments tell us that if you buy a share of a TCS, you can hold that share until you do not want to sell it. So you can hold that share for the long period of a time. So this equity shows that you can hold that share for the long time until you do not want to sell it. Okay, but here you have to pay a full money of that share, whatever the share price. Okay, full money, nothing but share price. Okay, that's why this equity segment also called as a cash segment. So here risk is lower because your mind is clear, you want to keep it for the long time, correct? Now, what is about derivative, currency and commodity? So derivative and currency and commodity, all three segments are expiry basis contract. Okay, so if we see a derivative is an expiry basis contract. It's mean TCS will be divided into the expiry basis. Okay, so TCS will be listed in the derivative segment like October expiry, November expiry and December expiry on some date. Okay, so this expiry shows us that you can hold this TCS share if you choose a derivative segments till this month. After that you can't hold it. Okay, so you have to close their position whatever you have bought here on this last month. So what is the benefit of this short term expiry? Here you not need to pay full margin as in equity segment. So here you can pay a less margin as compared to equity and you are taking higher risk because in this month the shares price goes down or goes up, you have to close your position. Okay, whatever the loss and whatever the profit you make till that date of expiry. Okay, so here you can't hold your shares long time. Can't hold share long time, right? This currency and commodity also seem like a derivative, but derivative is different because this derivative has an underlying of equity. You can trade in equity as well in a TCS contract and you can trade on a TCS on a expiry contract. But in currency and commodity, you have to trade and you have to place order on expiry basis contract only. But in currency, you place order like USD INR currencies, whatever the currencies are available in the market, right? USD INR, JPY INR, etc. There are multiple contracts you can find it. So you trade always on a currencies, but you can't trade on a underlying. Okay, you have to trade on a expiry basis contract only. Okay, so the same case you have to pay a less margin, higher risk, and you can't hold it, these currencies for the long time. Similarly for the commodity as well. So commodity as well you have to trade on an expiry basis contract. Okay. So in all three segments you not need to pay a full margin of the shares. You always pay a less margin as compared to underlying and you taking a higher risk because after that expiry you can't hold it. Okay, whatever the profit and the loss you make. Now all three segments also called as FNO contract. Why FNO contract? Because all three segments divided into two further categories called as future and option. Okay, now option is also divided further, call which is called CE and put which is called PE. Now what is the benefit of future and option in these segments? So as you can see, in equity you have to buy first, right? But in derivative currency commodity you are also allowed to short selling. So here also allowed short selling. What is the meaning of the short selling? The short selling, it's mean you not need to buy the first contract. You can also place a order of a sell position directly. Okay, so it doesn't matter you have buy or not. Okay, so here it's tell us you can make a profit if market goes down. So if you sell any position or if you sell any order at 100 rupees and market goes down till 80, and at 80 rupees you again buy the share, it's mean you make a profit of 20 rupees. But in equity you have to buy first, right? So this is also according to your prediction, right? If you market goes down, so you can choose this derivative segment first, you can sell, and then again you have to buy. So this gives a benefit of this facility, correct? So now call and put also further categorized by our strike prices. Strike price, okay? So this call and put have a long description, future and options, so we'll see further. But for now just remember, in call you can make a profit if market goes up, but in put you can make a profit if market goes down. So if you buy a shares in a call and if you buy a share in a put, okay? So if you buy a share in a call, if market goes up, then you will make a profit. If you buy a share in a put and market goes down, so you will make a profit, okay? So this is a just funda of call and put, okay? Now this future and options derived from derivative, currency and commodity. So in the next video we will see the intraday trading, margin trading, and there are multiple products which is also further categorized by the broker only, okay? This facility is not given by the exchange, so this intraday trading, margin trading is facilities by the broker, and this also giving you a functionality to charge a less margin, so you can hold its shares and buy the shares in a less to less margins. Thank you. Bye bye.